All right, let's talk real estate. Every great investor will tell you that a killer deal is only as good as the cash you have to back it up. But here's the thing, not all money is the same. Today, we're prying open the investor's toolbox to break down the specialized loans that are built to fuel your exact strategy. So, here's our game plan. We're going to frame the overall strategy, and then we'll dive into three key loan types: the fix and flip, the construction and bridge loans, and my personal favorite, the DSCR loan. Then we'll wrap it all up by looking at what really makes a lender a true partner for an investor. Think about it like this. You wouldn't put regular unleaded gas in a Formula One race car, right? It's the same thing in real estate. A typical 30-year mortgage? Great for your own home. But for flipping a house in 6 months or building a rental portfolio, it's just the wrong tool. The real challenge is matching the right fuel to your specific real estate engine. Yeah, this is all about having the right tool for the right job. So let's open up that toolkit and really look at the financial products that were engineered from the ground up for renovating, for building, and for scaling your real estate empire. Okay, first up, the absolute classic, the fix and flip loan. This is the perfect weapon for investors who see a diamond in the rough, but they need cash that moves as fast as their vision. So here's the flipper's dilemma, and if you've done this, you know exactly what I'm talking about. It's one thing to get a loan to buy the house, but what about the 50, 60, even 100 grand you need for the actual renovation? That's the cash that gets tied up, and it's often the biggest thing holding people back from doing more deals. And boom, here's the solution. Lenders will often fund up to 90% of the total cost, which includes the purchase and the renovation budget. But the real magic, the part you need to pay attention to, is that second line, 100% rehab financing. They can cover the entire renovation budget. That frees up your cash for your next deal. Plus, with short-term, interest-only payments, your monthly costs stay super low while you're doing the work. And this tool is just incredibly versatile. We're not just talking about huge gut renovations. It works perfectly for lighter cosmetic jobs too. And what's really important is that it's for everyone, whether you're a seasoned pro on your 50th flip or a first-timer with a really solid plan. All right, next up, we have a powerful duo for two very different investors: the builder, who's creating something from nothing, and the opportunist, who needs to move lightning fast. One loan builds value from scratch, the other captures it in a flash. So for a brand new build, the funding is based on the project's total cost and what it's going to be worth when you're done. That's the after repair value, or ARV. But the key difference is how you get the money. It's draw-based, which means the cash is released in stages as you hit key milestones. Foundations poured, framings up, drywalls in. This keeps the funding perfectly in sync with your actual progress. And then you've got the bridge loan. This is like your financial Swiss Army knife. When an amazing deal pops up, but you have to close in like 10 days, not 30, this is your answer. It requires minimal paperwork and gives you that fast, short-term cash to bridge the gap until you can either sell the property or get more permanent financing in place. So it really just boils down to this simple question. Are you creating a new asset, or are you seizing an existing one? A construction loan is a methodical, step-by-step partnership. A bridge loan, that's a tactical strike. You just need to know which game you're playing. Okay, now let's talk about a total game changer, especially for you buy and hold investors out there. If your goal is to build a serious portfolio of rental properties, this next tool is designed specifically to help you scale, and it totally rewrites the rules for how you qualify. Just let that sink in for a second. No income docs. This quote cuts right to the chase. Traditional lenders, they want your W-2s, your tax returns, your life story. This loan cares about one thing and one thing only. Does the property itself make enough money to pay for itself? That's it. So how does it actually work? Well, it all comes down to a super simple formula, the debt service coverage ratio. You just take the property's monthly rent and divide it by the monthly mortgage payment. If that number is 1.0 or higher, the property cash flows and it qualifies. Your personal income? Completely irrelevant. This is huge for investors. You're not digging up 2 years of tax returns. You can get long-term financing. And, this is critical, you can get these loans in the name of your LLC. That's how you protect your personal assets as you start to really grow your portfolio. Okay, so we've talked about the what, the different kinds of loans. But the who you get your money from, that's just as important. So let's look at what separates a regular bank from a lender that is truly built for investors. First thing, speed. 14 days. That is the average time to close a deal. In a hot market where the best deals are gone tomorrow, being able to close in 2 weeks instead of 2 months isn't just nice, it's a massive strategic advantage. Second, their reach. We're talking 42 states. That means you are not stuck investing in your own backyard. Whether the opportunity is across town or across the country, you've got a capital partner that can make it happen. And finally, experience. Over $100 million funded. Look, this isn't some startup that's just testing the waters. This is a lender with a deep track record, which means they get it. They understand investor deals, and they won't get scared off by a project that doesn't fit into some neat little conventional box. And all of that, the speed, the reach, the experience, it comes back to one simple idea. When your lender is run by people who have actually been in your shoes, people who have flipped houses and managed rentals themselves, they build the exact process they always wished they had. So we've laid out the entire toolkit. You've got financing for flips, for new construction, for those quick strike opportunities, and for scaling a massive rental portfolio. The capital is out there, custom built for your strategy. So the only real question left is, what are you going to build next?